If you've been interested in trading, the chances are you've probably been tempted to get involved with one of these pop-up trading challenge companies that seem to be springing up all over the place. Now, for the longest time, I've had my own reservations towards these companies, purely because the reason I got into trading education was to kind of dispel the myths and get rid of the BS, to put people on the right path to consistently profitable trading. Now, in the many years that I've been trading, I've seen it all, but when these trader challenge companies started popping up all over the place, something didn't quite sit right with me. Why? Well, mainly the way that they're getting people in. Many of these firms are incentivizing traders to come into their firm in a way that is not going to be beneficial for them long term. They're making traders believe that you have to earn a certain amount in a certain time, which is just not true and it's not realistic. And when you think about it, that completely exposes the flaw and the hidden agenda with most of these companies. So my goal has always been to give you the right information. I want you guys to succeed. So I thought, how can I use this to this community's advantage? So what I thought I'd do is use my name and my position to get into some of these companies, but not just these companies, some of the best prop firms and the most respected prop firms, to see what it actually takes to become a successful and funded trader, what they look for. So firstly, I'm going to be lifting the bonnet on some of these firms and I'm going to be giving them a hard time and giving you guys the truth. Second of all, I'm going to be talking to some incredibly successful prop firms and the head of recruitment of these prop firms to finally give you the truth so that you can steer on the right path and you're equipped with the right information so that if you want to go and get funded, then hopefully you can have the right approach. Now, there's no doubt in my mind that having access to external funds is going to be a benefit to you as a trader because it will accelerate your journey to becoming an independent retail trader. However, there's so many scams out there and things to be aware of. I want to make sure that you've got the right information. So the first interview that I'm going to conduct is with a company called City Traders Imperium, and we're going to be talking about the dirt and the grit and the goings on behind the scenes and some undermining stuff that you might want to be aware of before you consider one of these challenges. So let's get stuck into the first interview. But before we do that, don't forget to like and subscribe to this channel so you don't miss the next interviews. Let's go. Okay, so now I'm here with Rodrigo from City Traders Imperium. He's a performance coach and a portfolio manager at City Traders Imperium. Welcome, Rodrigo. How are you doing?
I'm very good. Thanks for having me, Jason.
Oh, thanks for coming on. This is going to be a really valuable session because obviously this is there's a growing interest in particularly a traders funding program. And I believe City Traders do the trader funder program. But before we get into that, tell us a little bit about you and your role and what you do as a performance coach at City Traders Imperium.
So I started in CTI as just a normal funded trader. I was previously at a prop firm in Mayfair. They also had an office in Dubai. So that's when my journey into professional trading really started. So when I heard about CTI, funded trading, essentially remote trading. And I was at the time commuting to London. Sometimes It would take me like 2 hours to get there because I live in Essex. And so that really affected my performance. And I wanted to and that firm didn't want me to manage any funds from home. So obviously, I jumped onto Google, found City Traders Imperium, found a few others, and I realized that, CTI seemed a bit more of what I'm used to in terms of a professional approach, in terms of the rules and everything. So I managed to pass the evaluation in under 2 months, and then I decided that I wanted to meet the co-founders. I wanted to see what's CTI all about. I'm a type of person that I like to shake hands with people, especially when I'm doing business with them. So I met up with Daniel and Martin in Canary Wharf when they had an office there at the time. And we got along really, really well. And at the time, I think they had launched around 2018. So this was 2019. They were still early in the business in launching all the funded accounts. So the things that we were discussing is exactly what we're going to discuss today is how can we get funded traders to succeed in this? This is such a great opportunity. And so after a few more meetings, I came on as a performance coach to help traders achieve that consistency, profitability, and most importantly, the mindset. So And so for me personally, my goal, or my role in CTI is essentially just is to help traders, those who are willing to commit to take their trading to the next level. So we go through at CTI, we offer more different type of strategies. We offer a build your edge program that focuses on psychology and just builds those fundamental principles that every trader needs. And so that's exactly what I've been doing from the beginning.
Cool. Amazing.
It's great. I really enjoy it, and yeah, it's all tied in with the topic that we're going to discuss about
Yeah.
funded traders and what makes them fail, what makes them succeed. So I'm excited to get into that topic.
Yeah, it's going to be a really valuable discussion. Before we get into that, just out of interest, because I'm connected with quite a lot of decent prop firms. I'm speaking to Mike Bellafiore from S&B after this. But during the pandemic, everyone was basically forced to work remotely. In fact, S&B set up a lot of infrastructure so their traders could work remotely from their home desk. The Mayfair prop firm that you, without naming names or going into details on the kind of the politics there, what was the reasoning for not wanting you to work remote? Why would they want you in the office?
It was just risk management, just
Okay.
a risk management protocol. It was there's a lot of capital. Anything can happen from home, but this was pre-pandemic.
Right.
So when I started working, well, when I started trading for CTI, that was 2019, going into 2020. So I started working from home with CTI way before the lockdowns. And so when the lockdowns did come, I was already quite used to my routine at home. And it's something that I've always dreamt about. When I first started trading, I always had the goal of having this freedom, this time-based freedom, not necessarily money-based. And for me, having the time and trade from home, having my own home office, that was really what my dream was. That's what really attracted me to funded trading. So although the opportunity on an actual professional trading floor with other traders, it has its perks. It's amazing. I learned you learn so much from those environments. I've always wanted to have my own space, my own sort of temple. That's the type of person that I am. And I guess with the lockdowns that happened, I was leading to that anyway. So I'm quite very, very lucky, very fortunate.
Great. All right. So look, let's not beat about the bush. Let's get stuck into it. A lot of people going into the trading space, particularly over the last couple of years. We've seen a massive influx in trading education. Obviously, there's a lot more traders that want to get funded because there's this idea that if you can become consistently profitable, we can fund your account. That will help you accelerate the growth of your account, and it will help you accelerate on the way to manage your own money and grow your account, etc. It's obvious perks, right? Everyone who's watching this video knows the perks, which is why you're watching the video. Let's start off with, we know there's a massive failure rate in trading. What are the stats like? What's kind of without exact numbers, unless you have exact numbers, what's the failure rate? Like what's the success rate, failure rate of people actually getting funded?
So it's pretty much the standard statistic that you hear about everywhere. It's from our point of view, it's pretty much the same as you see in all brokerages. So it changes every month, but it's in the 90%. So over
5 to 10% success rate, right?
Yeah, precisely. Sometimes even just 1%. There are certain months where just 1% of the funded traders do pass. So it is a high failure rate. And this is why I wanted to have this conversation with you as well. It's just so that traders understand that this isn't a walk in the park.
No, and hopefully if they watch this video, by the end of it, they'll be more equipped, and they'll take a bit more of a professional approach, and they'll bear in mind some of the things we're going to cover as to why people fail, and then they won't do that. So this is really kind of geared towards helping people succeed and get funded as a trader. And I'm really trying to nail down what those things are, so that we can let traders know why there's such a failure rate and what makes a good trader. So I'm trying to get some of the common themes in what makes a good trader and what makes a bad trader from you guys, so that we can deliver that information to them. So high failure rate, low success rate. Let's talk about why people want to go, or what you've seen as the motivation for most traders for wanting to get a funded account. Why do they want it?
It's pretty much the lifestyle of exactly the reason why I wanted to move away from professional trading into more funded trading. It's the attraction of the lifestyle. It's that financial freedom, being your own boss, and doing it from anywhere in the world, as long as you've got an internet connection. So there's this sort of layer one desire of being a trader, and that's what everyone sees in social media. But they don't realize that there's a layer two, layer three that goes a lot deeper than just being a trader. It's not. I mean, if realistically, the best traders that I know of, they don't really have a social life. They're not traveling, going on holidays every week. They're not going out to eat, having lavish meals. The fact is they're doing the work, they're putting the work in, and so most traders, well, most wannabe professional or profitable traders, they just look at the layer one. They just look at the sort of like the carrot on the stick, the lifestyle. That's the main reason why traders they wanna become
it's really ironic, right? Because obviously we know that that's the truth, but the lifestyle that they're attracted to is usually portrayed by people who look like they're successful traders but are not, because as you say, most traders aren't into all that stuff. They're not. That is not what they're doing. That's not what they're spending their money on. They're grinding, they're looking at the markets, they're coming up, refining their edge, staying on top of the market, really doubling down on their trading game. And they're not going around wearing Gucci shoes and traveling to all around the world. They're not doing that. They can do it, but they typically don't do that when they're in the kind of elite level. Certainly the elite traders that I've worked with are certainly not like that anyway. So it's kind of it's kind of ironic, really. It's it's a bit of a tragedy. But let's talk about when people come in to get funded. Then we know why they want to do it. What's the biggest kind of realization where they go, maybe this isn't what I want to do then? Like what turns them away? Like, why do they leave? And we're not talking about failure. We're not talking about skills. We're talking about like it's just not for them and they turn away.
I think those traders that completely just quit, it's pretty much they realize how stressful it is, or they literally reached a point where they don't actually have a budget anymore to pay for more funded accounts. And for many traders around the world, a funded account can be very expensive. It could be several months worth of salary. And so I guess there is a high failure rate, but there is also a high quitting rate. And so I've been in the industry since 2014, and I've seen so many educators, so many students. They just come and go. They come and go. There's always someone new coming in, and they just get younger and younger. Or maybe I'm just getting older and older. And it's I think that the industry is tough. Trading is one of the toughest performance careers you can ever go for. So there is always going to be a high quitting rate. And so I think it goes down to they literally just don't have any more money left to get any more funding, or it's just they might decide that having a job and having that steady income is preferred because of that security. And trading is it's really tough, because in order for you to do it properly, you have to work towards being full-time. And so there is also that barrier for many traders, most traders, in fact, that barrier of their circumstances. Do they have enough savings?
Take the leap time, right? It's like take the leap time. Yeah.
Precisely. It's there's a so yeah, the majority of the traders that we work with are working full-time or working part-time. In fact, we prefer for traders to be in that position so that when they're trading, they're not trading to pay their bills. They're trading to trade, to follow their edge, to follow their principles and rules. Whereas those traders that they don't have much, they don't have an income, they're just going all in every single time. Some of them get lucky, and then they make a YouTube video that they've made 20,000, 10,000.
Yeah, it's not sustainable though, right?
It's not sustainable, exactly. And the statistics are pretty much. I know you asked me earlier, but yeah, it's sometimes it's a 5%, 1% of traders pass, but even after they pass, it's still a high failure rate.
Yeah.
And even within 2 to 3 months, traders may not continue to have that funded account because they feel they're not prepared, they're not ready, physically ready for that type of I guess incremental.
Yeah.
Like for example, when you pass the evaluation, we give you 4 times the amount that you had in the evaluation. So if you had a $12,500 evaluation, you would, that once you pass and you pass the verification, you'll have a 50K funded account. Whereas in what I'm used to in the professional space is having like 5% increments, maybe 10% increments, and it's just you gradually, or you increase from 25, a quarter of a percent risk, you put it up to maybe 0.4%. This is that you gradually increase the risk. Whereas with funded trading, it's almost like, right, you're driving a Peugeot and then here, all right, here's the keys to a Ferrari.
Really, really interesting. Really interesting. And I want to talk a little bit more about that. You mentioned that, there's a high failure rate. There's also a high dropout rate. And that's the same in any business, right? Most businesses don't work. And a lot of people think, oh, the business fails because the business is crap or the product's crap. But actually, a lot of the people just go, this isn't for me. I just haven't done the numbers and figured out how much time I've got to spend standing in this sandwich shop selling sandwiches to get 70 quid a day or whatever it might be, right? They think about that later. Yeah. They don't think about it before. So then when it hits them, they're like, I'm not doing this. And they give up. So that, and quite rightly, like, why would you do that if that's not what you value your time at? And with trading, it's the same thing. You don't, because of how it's portrayed, you don't see all of the dark side. You don't see all of the kind of drawbacks with everything. You're just seeing this shiny object. So when you go into it and you realize, oh, this is much harder than it was meant to look or meant to be, that's going to make you go, do you know what? This isn't for me either. So yeah, of course, there's a higher failure rate. Now, one of the things you mentioned there was really interesting, where you said people go in and get lucky and they don't have an income, and that affects their mindset because of their approach to trading. Now, one of my gripes with the whole funding thing, right, is a lot of them are geared around challenges where you have to make a certain percent in a certain amount of time. Now, how is that not luck then in any way? Like, so how is every trader that's getting funded not just getting lucky?
That's a really good point. And with trading, there is always an element of luck. And so for that's why our funded program is very different to most of the industry. In fact, most of the industry, they give you 30 calendar days to hit a specific target. It's usually 10%. Then you got another 30 days to hit 5%. That's usually the common sort of evaluation stage. But it's when you actually look at the reality, is not 30 calendar days, it's 21 on average. It's 21 trading.
Yeah, right, because it's trading days. Yeah.
So it's even less than that. Whereas what we do is we give up to 12 months, and so it's,
so you get a good average of performance.
Yeah, so in 12 months, we are, during the evaluation, we ask traders to hit 7% in 12 months, because we don't want gambling traders. We want traders. Incredible. We don't want traders that get lucky. We want traders who are consistently profitable and are disciplined. And so we can very, very easily see that within a 12-month period. You can't see that in 21 days.
Of course not.
Days, you get
that's lucky. Common sense. Like, that's common sense. You are literally teaching people to go into trading telling them to go about it in a way that isn't trading. And as you say, half of the problem is they give up when they don't, and they can't replicate it because it's not realistic. The last thing you want to do in any kind of approach to trading is increase your expectations of your performance. What you want to do is lower your expectations of your performance, because then when you perform better than expected, you're going to have the kind of psychological mental strength to go forward. If you start performing worse than you than you did, it's going to affect you. That's going to affect you seriously. So if you get lucky and hit 10% in 30 days or 21 days, as Rodrigo said, then after that, bear in mind, hitting 10% in a 21-day period, you have to be lucky. That is luck. It's luck that the market and your system, whatever you're trading, has aligned to allow you to get 20% or whatever it is in that 21 days. There's no one that can disagree with that. So after that 21 days, if you're not getting 10%, or that's going to affect you. But not only that, that whole approach is not what trading is about. That's not what you should be focusing on. You should be focusing on longer term averages, less volatility in your account growth, and managing risk and steady equity curve. That's really what that's what professional prop firms that I work with and I know and respect, that's what they look for. Would you say that's fair?
Yeah, absolutely agree with what you're saying. But then the funding trader industry has taken a completely different approach to your traditional professional prop firm industry. It's even though they may, like many funded firms, they call themselves prop firms, but they're tailored towards more retail traders, and so there's definitely a definition of being a funded trader is completely different to a professional prop trader. Definitely, I've been in both roles, and they're completely different. And what you mentioned about the luck situation, it's pretty much, when you think about it like this, normally a trader who gets lucky, they'll pay about $600 for a $100,000 trading account. So they have 100,000 buying power. In fact, they have more buying power because that account will be a 100 leverage account. So they'll have, from a $600 account, $600, should we call it sign up fee, or they have about $1 million worth of buying power, if not more. And so then if they do succeed and they hit a 10% target, then they're getting about a 70 to 80% payout. So from that $600 initial payment, they suddenly got $7-8 grand. That's when you think about the risk reward behind that, that's a massive type. That's a huge trade. If you see that as a trade, that's a huge risk reward, right? And especially if you can achieve that in a week or two, because remember, you've got 21 days. And so when that trader is then given, I guess, access and to the next stage, they've gone in with that expectation. With what you've mentioned is that, right, I need to do this again. And then you think, right, if I can do this for consecutively for the next 6 months, I can go and buy this, I can go and achieve that, I can then, they start thinking about all of this. And so this is the conversations that I have with traders,
right?
Because I work with traders. A lot of the traders that I work with have I guess been disqualified or failed many funded accounts, not just with CTI but others. And so we talk about these sorts of issues, and we go in deep in terms of what they're thinking. And it's pretty much that at the time of when they find success, they start dreaming, they start planning things, they start spending money they don't have, they start quit. Some people have quit their jobs literally from passing one account. They're like, why? I've just made 7 grand. I'm quitting. I'm a full-time trader now. I'm like, hey, and so they obviously find out that in reality it's completely different. You can't just
difficult to replicate over and over again, right?
Yeah, you can't replicate that. It is luck. So that's why at CTI we have a completely different approach to.
That's awesome, and I'd love to hear more about that in a moment. So what we just said was basically when he said most prop firms or prop firms are kind of disguised as prop firms, or they've got this kind of product that basically capitalizes on knowing that people are going to fail and getting some money out of them, basically. And the rawest form, a prop firm, is me opening up a company, putting my own money into it, and then getting other traders into the prop firm to trade that money to give them profit share. And the whole purpose of a prop firm at its core is the most selfish business model ever, to grow the company's money. That is it. That's it, right? That's what a prop firm is. If you compare, like, what's happening now with some prop firms when they're kind of disguising these kind of challenges, if you want to call them challenges, whatever, but some of the kind of unethical, or the ones that are just set up as a win-win situation, it's a bit like me opening a bank and then getting some traders to trade the money in the bank. Great, we're growing our capital. And then you go, well, how else does a bank earn money? Well, I need to sell some products. What can the product be? A mortgage. Let's give someone a house, or I'll own the house, but I'll let them live in it, and I'll give them 100-to-1 leverage on their mortgage, so they think they own it, but I own it, right? And then they're just doing that, so it's win-win for the bank. Like, it's another revenue stream that's kind of earned on the side. Like, it's an unfair advantage to the bank. It's not, and that's what they were seeing. That's what we're seeing. We're seeing these kind of prop firms mold into, how can we generate revenue? But it's win-win. Whereas what you're saying is it's much more a long-term approach. You're really invested in what the traders are struggling with, because of course you want more good traders over a 12-month period, because you're going to grow the capital in the business the right way, sustainably, long-term. It's not like they'll be flat on their neck in 21 days and they'll move on, right?
Precisely. And at CTI, we actually use live funds. And the business model in the funding industry, they don't use live funds. These are all demo accounts. And some are a bit more honest about that. Most of them are not. So they're in the business of profit, of course, but their profit actually comes from traders failing.
Exactly.
And so that's why they do so well. Whereas
you default on a mortgage, the bank keeps the house, right?
Yeah,
that's it.
And so traders, but when I speak to traders, particularly funded traders, I ask them, but do you realize you are trading a demo account? And they're like, well, I don't really care. As long as I get my payout, then I don't care. And it's that, it's that attitude is, I guess, it's they don't think about the ethics behind it. They thinking more about, as long as I get my money, if I profit, then I don't care if it's a demo account, it's a live account. But then if you go in as a when you trade with different, or when you manage funds for all these other sort of demo funded accounts, you start to really, especially if you're a good trader, good traders struggle to get payouts. And the reason for that is because if, for example, a funded firm that has a demo model, if there are a group of traders that do really well 1 month, but during that month it might have been a slow month in terms of sign-up fees, that would end up being a losing month for that business. And so what they'll do is they'll come up with excuses or reasons not to give the full payouts to the good traders.
Wow.
So I mean, from what I've seen and what I've spoken with good funded traders, because the good funded traders, they're quite smart. They funded with many of these firms, and they'll have a copy trading system just to like simultaneously trade on all the MT4 accounts. So, but then they realize that the dodgiest ones, which are the demo ones, they all, if they profit more than 10K, they start making up excuses or reasons. Okay, you traded the news here, we're not going to pay you that profit, or you held your trade overnight.
So that goes on, does it?
So yeah, it goes on, and that obviously. So even as a good trader, even though that those 1% of traders,
you're still getting screwed.
You're still getting screwed. You're not getting what you deserve. Why? Because you're trading a demo account. So obviously, their business is not sustainable.
Interesting.
They can't sustain it, but the only way to sustain it, as long as the subscription fees are higher than the payout fees. That's
revenue. Yeah, yeah,
the revenue
yeah.
fees. So
Very interesting. Very interesting insight. And anyone watching this, you know, take that on board, and do with it. Do with it
yeah, I
as
mean, it's
you.
important for everybody to understand the sort of the business model
Absolutely.
from because if you're gonna if you see this as as an income stream or as an investment, which it kind of is,
Yeah.
you know, it's you have to understand, if you see this whole thing as a trade, you have to understand the trade. You have to understand where you have an edge.
Yeah.
And so if you the more you understand the industry and how it works, uh, the more
The
you
more
will
you can
have.
play it, the more you can play it, right? Yeah.
Yeah, if you know the rules, exactly. If you know the rules, then you can
You
play very
exploit
well.
it. Yeah, yeah, absolutely. And you don't want these hidden, oh, well, you're not having 2% there, you're not having 4% there, you're not having 3% there. You can't have that in your trading. Like, you need to know what the expected numbers are so that you can carry on developing that edge and retaining that edge. So, what are the some of the people that work with you then? Like, what's some of the things that people really struggle with, in terms of, you know, technical, or, you know, what do they technically struggle with? What's the biggest struggles with traders,
Um,
other than mindset? Because I think we've covered a lot of that.
okay, so other than a mindset, I guess it comes down to, well, yeah, I guess the everything well, I guess 80% of it or 90% of it is mindset.
Definitely.
So you know, it does take time for traders to sort of reach that a level of mindset, or I guess of composure, to
Yeah.
be able to apply a good strategy. And
Is
but in
consistency
terms
an
of,
issue?
pardon?
Is consistency an issue?
Of course, so consistency is definitely an issue, but consistency does relate to psychology, isn't it?
Of course. Yeah.
And most traders that we work with, they've studied multiple strategies, right? So have I. I've studied different strategies, and I've kind of just made my own strategy
Yeah.
based on those. And I guess that's what you're meant to do anyway. But
Yeah.
sometimes there is just too much information. So traders, the ones that they have a good strategy, they may be trading too many pairs. They
Hmm.
may be they may be trading so many pairs and looking at so many markets that it just gets really difficult to make clear, concise decisions.
Yeah.
And so what we like to teach is just start with just one or two pairs, back test them, and really find your edge in those. Get to know their personality. If we're talking about FX, or yeah, you know, you're trading these forex pairs, and these forex pairs, some of them they move during certain times. Certain patterns play out more often than not, and also the time frames. You know, choose the time frame that you're in. So in terms of from a technical point of view, from a practical point of view, there's that. There's also this a struggle with consistency based on their circumstances. So we
Yep.
work with traders that have families, they
Yeah. Their
have
lifestyle, right?
their lifestyle, yeah, so their circumstances. So um, basically I help traders formulate a routine that is personalized for them, so that they have time to back test, they have time to be in front of the charts at the right time, they
Yeah.
have time to do their ASR on the weekends, and they're reviewing their journal. So it's that's the reality, and I guess that's the principles that traders, they, after a while, they realize, okay, I need this stuff.
Yeah.
It's not just, you know, doing a few charts, you know, clicking a few trades here and there, and then just forgetting about that trade. No, there's actually a whole entire process. The trading aspect of it, the execution is like probably like 5%.
Yeah.
There's the whole planning, there's the reviewing, there's the before and after. That, you know, we even study like your colleague Mike Bellafury. I've watched tons of his videos, and you know, talking about and he has Dr. Brett Steenberger. He's worked
Steamburger.
with,
Yep.
watched a lot of his content as well, and read his books, and they talk about discussing and recording yourself whilst you're trading or whilst you're
Yep.
backtesting it, and describing how you feel at the time.
Yeah.
record your face, and then look back at that content, look back at that
As a
video.
third person. Yeah.
As
As a
yeah,
out of body. Yeah.
that requires time. That requires a lot of patience, and so uh, I think those are the things that really where traders struggle, and then because they don't realize that there are certain, I guess, tools that you need and certain processes that you need to
Certain
go through
strategies. Yeah.
in the beginning that have nothing to do with execution. It's basically a
Yeah.
process, and so that's
And that
essentially,
eats into their time, and that eats into their other time, their
yeah,
family time. Yeah. Yeah.
yeah. It's trading is a lifestyle in its own.
That's why I
Um,
say a lot of our traders who do
yeah,
well out the gate and do it quickly ish are like 18 to 25 years old, no dependents, no overheads, live at home with their parents, money oriented, you know, 15 hours a day on their trading, building a lot of progress, a lot of momentum. They do well. The other people that do really well are the people that have got a business working and they've got more time and they don't have to worry about income and they've got loads of time on their hands. A bit like when you see all the old people on the golf course, right? They're old because, and they're on the golf course all day because their business is working and they don't have to worry about the money and the time. They can go and learn golf. And that's why they're all old, right? So you're either old or you're young. And I'm not saying you can't do it in between because you can. It's just a little bit more stressful if you don't take into consideration and have the expectations of these strategies that you're going to need to implement and the time that it's going to take.
yeah.
So talking of time, 12 months, right? That I can see a lot of people dropping out in 12 months. Like that's obviously it's a better approach, but I can see a lot of giving up in that process. Do you see that?
Of course, yeah. There's I think, and we don't, more often than not, there's not that much quitting during that time. It's more about sometimes they need a break. Sometimes
Right.
they might be traveling. Sometimes they're in between jobs. Sometimes they're moving home, and so they'll need a month or two just to get used to the new environment, new
Yeah.
routine. And so we do allow our traders to just have a freeze during that time. And
Right.
that time, if it's 2 or 3 months, we then extend it over so it takes even longer than the 12 months from the beginning. So
That's
we
great though, because
come
they
to
don't carry on that pressure of, oh, now I've got less time, right?
exactly. So we do give traders that flexibility,
Yeah.
and I think that's why we have most traders with CCI, they don't quit. We communicate with each other
Yeah.
and they just express what situation they're in, and then obviously we make things work. That we always try to find a solution, and that's kind of how we do things. It's really different to what you see.
I know. I know.
It's
Yeah.
just because it's yeah, you have 21 days. That's it.
Yeah. I'm going to be grilling, like I'm grilling FTMO in a couple of days. So I'm not going to give it to him easy. I want to find out exactly the same things I'm asking you, you know?
Yeah.
So let's just say, let's kind of just round it off with this question. If you could create like the RoboCop trader that comes in is like perfect, what would be the kind of attributes of that trader that would succeed? Like you've worked in a lot of funding companies, prop firms, you've seen a lot. So what are the characteristics and the traits and the qualities of the traders that do well? The common out, the similarities.
Yeah, it's a great question. I think what you need is a type of attitude towards trading where it's all about persistence and it's all about accepting where you are and submitting to the process. So you're constantly, if you were the perfect trader, you would have to be constantly on that learning process and learning and development, constantly testing yourself and making those small tweaks. It doesn't have to be a 10% tweak or even a 1% tweak, even if it's a 0.5% tweak on your system or on your routine or even on your diet, or even squeezing in an extra 30 minutes of sleep. That those small changes can make a big difference, especially over a period of time. So that's why persistence is so important. And so in the beginning, I think the perfect trader would be someone that submits to that process to get their mindset, their routine their mind, body, and soul. Everything has to be aligned for executing that process of being a trader. And so you literally have to dedicate your entire life, your entire being, to being a trader. So you sleep because you need good rest for trading. The relationships around you, the people that you spend time with, are those people who are going to uplift you and support you in your trading. You go to the gym and you work out because you want good energy, you want focus, you want endurance and stamina for your trading. You're going to skip the bolognese for lunch because you know that's going to make you sleepy. So you opt for something a bit lighter. You might go for yogurt, nuts, berries. That's those are the things that you need to think about and execute. So everything that you do has to be to optimize your trading and your performance. Everything.
And you create a discipline with that as well, right? A natural discipline.
Exactly. And if you're not willing to commit to that, if you're not willing to burn your bridges and do that, then there's a very small chance that you'll succeed. Whereas the traders that I've worked with or that I've seen succeed are the ones that done all of that. They burnt their bridges, and everything that they do, everything that they breathe from the moment, literally everything that they do is to be that trader. And so even if you have a bad day, even if you lose a trade, those individuals, they keep going. They review that trade. They find out what happened. Did they follow their rules? Yeah, fantastic. Good loss. It's just a good loss. And knowing the difference between a good loss and a bad loss, and a good win and a bad win. Those things, that type of sort of
they're the things that matter.
Those are the things that really matter. Exactly.
What a great way to round off. So like, I love what you said about the perfect trader. The perfect trader, or the perfect anyone in life who's going to succeed at anything. The perfect trader is the person that accepts that perfection doesn't exist. That's it. Like, there is no perfect, and you don't strive to be perfect. You just strive to be better than yesterday. That's it. Do things that are better than yesterday, more efficient, more effective. And that's it. People who chase perfectionism or believe that perfectionism is even a thing is literally stopping their own tracks. They're stopping themselves from going off to even making progress, because they won't make progress unless they're perfect, but perfect doesn't exist. So great.
Love that.
Great mindset. So man, listen, it's been a pleasure talking to you. Really good chat, really valuable topic. There's no way that any trader couldn't get value from this discussion. All right, guys, so that's the first interview. If you liked it, let me know. If you've got any comments or questions for the other guys, let me know in the comments. I will be passing on these questions, and I'll be finding out the information to give you an answer. Next up, I'm going to be talking to Mike Bellafiore from a very well-respected Midtown Manhattan prop firm, and their head of recruitment. So if anyone knows what it takes to be funded and why such a small percentage of people get accepted into these challenges, it's those guys. You're going to want to tune into the next one. Until then, hit the like button, hit the subscribe button, and I'll see you then.